Welcome to Tony Burns View with news you can use. As a chartered financial planner and wealth manager, Tony's passion is to help you retire early and live the life of your dreams with no financial worries. Now to today's episode.
How to save money with an offset mortgage and earn a higher rate of interest on your savings tax-free. The Bank of England base rate has risen a staggering 290% since 14th of December 2021, from 0.1% to 3%. As a consequence, interest rates on savings and mortgages have also risen. However, the increase in interest rates on savings always seems to lag the increase in interest rates on borrowings. Now that the base rate is returning to its historical average of about 4% over the 328 years history of the Bank of England, it is making offset mortgages much more, interesting. Why is this? Well, let me illustrate what I mean by the use of a simple example. Let's say you have a bank mortgage of £100,000 and savings with various other banks, building societies and national savings totalling, say, £50,000. I would assume a mortgage interest rate of 5% and a deposit account interest rate of 2%. It is assumed you are a 40% taxpayer. Over 12 months, you will pay £5,000 in mortgage interest. You will receive £1,000 in interest, on which you will pay £400 income tax. Net cost to you is £4,400 a year, which is the £5,000 mortgage interest minus the £600 interest received net of tax. If you were to convert your mortgage to an offset mortgage instead, you would need to transfer all of your savings into an account with the same mortgage lender. Assuming the interest rates remain the same, the result is quite different. With an offset mortgage, you offset the savings account balance of £50,000 against a mortgage account balance of £100,000. The mortgage interest is calculated on the net balance of £50,000, not £100,000. This makes a significant difference. Your mortgage interest cost is reduced to just £2,500 a year because you're paying 5% interest on half the amount borrowed. In other words, £100,000 mortgage minus £50,000 deposit equals £50,000. You do not receive interest on your savings. However, you are, in effect, earning interest at a rate of 5%, which is a much higher rate of interest than is available on the market. Furthermore, it is effectively tax-free. The increase in interest earned is 317%. That's £2,500 compared to £600 net of tax, or a multiple of 4.17 times the £600, which is now £2,500. The overall net saving to you is 43%. You're only paying £2,500 a year now instead of £4,400 net of interest, net of tax. The other advantage of an offset mortgage is that you do not have to apply for a mortgage to raise funds, for example, for home improvements, holidays or car purchases. All you need to do is transfer funds from your savings account to pay for things like you would with any bank account. It is, in effect, a so-called checkbook mortgage. So a little skillful re-engineering of your finances can yield significant savings like this. Repeat these kinds of personal financial exercises and you may well be on the way to improving your financial position greatly. You know it makes sense.
Thank you for listening to today's episode. If you enjoyed it, don't forget to share it with your friends and family. For more information, head to www.wealthandtax.co.uk.